If you're investing in anything, you're making a guess about the future. You're trying to predict the unpredictable. You're trying to see which direction the market is headed and how you can make that make you a little bit of money. Well, financial planners and hedge fund managers all over the world do this for a living. And a lot of them miss a lot of things that a lot of us think are obvious. Can you predict the future? No, of course not. But if you're going to try, maybe you should talk to someone who has had a bit of success doing it in the past, which is why I'm talking with Larry Goldberg, a friend, a fellow rebellionaire, though that's just a badge we have on X so you know we're the real us's. What we're going to discuss today is how we got into this and what we saw and why we're still here. I'm Brian. Welcome to Futuraza. It's tricky. It's tricky. I read this rumor, Larry, that you were an early investor in Tesla. Is that true?
Yes, it is. Yeah.
Because you paid, let's see, that'd be, 36-ish or so? What'd you pay?
A little bit less than that.
Pre-split.
Yeah, a little bit less than that pre-split.
Yeah. So that's like $3 or something. It's pretty good. So what was it that you saw in Tesla when its market cap was under 2 billion that made you say, this is it?
Well, I've been an Elon follower for a very long time. What attracted me to Elon was not Tesla. What attracted me to Elon was SpaceX. And, the fact that he launches rockets or was planning to launch a rocket really attracted me to him when I heard from a fellow South African. There's a South African who's crazy enough. He wants to launch rockets. He made a lot of money in tech, blah, blah, blah. So I was in tech. I follow a lot of tech founders. I think I may have heard of his name before, but the fact that he was trying to build a rocket company was very attractive to me. I had stars in my eyes about rockets as a little boy of 11. I wrote to Werner von Braun and got a reply from him. I was going to be a rocketeer in my life. I built this little rocket with my cousin. It was really, it was the time of Sputnik. I'm sure you're too young to remember Sputnik or to have listened to the beep, 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 beep of Sputnik. And then I saw my first satellite. It was one of the most transformative moments of my life. I was walking across a very darkened field. I was still in high school, looked up at the sky, and I was mesmerized to see this star moving across the sky. I mean, mesmerized. Anyway, so starstruck, rocket struck. I heard about the South African. I'm a South African. So I looked him up, Googled him, and found that he had a blog. And it was a brilliantly written blog, brilliantly written about his attempts to launch these rockets. And we were at the third attempt. The third attempt had failed. And I read the first 3 or 4 blogs, and then I was at the one that had failed. So that was it. I was starstruck. And I followed Elon. And I remember hearing him the first time on the radio. There was Science Friday on NPR. Those were the days you could still listen to NPR. And it was Science Friday, and he came on. I thought, there's something wrong with this guy. He can't speak. He stutters and he can't speak and so on. But I got used to him, and I, was following him very closely. And I read his blogs on Tesla, which were very, very instructive. I don't know if you've read his writings before, Brian, but he writes brilliantly. His research is solid. His logic is solid. It flows very easily. And so, it was very compelling. So by the time the company went public, I had already known him for many years. I think I started following him in 2009. The company went public in 2011 or 2013. So I bought shares out of, a relatively small number of shares out of the IPO, not in the IPO, but the day after the IPO, and acquired a few. And, I was a very, very early investor in Amazon. Bought Amazon in about 1999, early 1999, at what was then considered a very high price. And that stock went down by almost 90% in 2000. And I kept acquiring. And because my conviction, not in the company, but in Bezos, because I'd been reading Bezos's end of year letter, and I was so struck by his writing. Same way I was struck by Elon's writing. That was the common thread. These guys had this very, very clear vision, brilliantly analyzed, and so that was, to me, this was another Jeff Bezos. Actually, it turns out he was probably a step up from Bezos, but I mean, we're talking about, gods in the firmament now. How high you go in the firmament, it doesn't matter. So, so that was it. That you asked me why. That's the whole of the why. It was a long story, long answer, but that's the reason.
So what I hear you saying is, even though the company didn't have much promise yet, you had what you considered a good understanding of the people running it, and that was enough to justify the low cost of investment at the
And
time.
the business model.
And the business model, sure.
He had already written, his the thesis about how he was going to progress, and so the thesis sounded so solid to me. And I had read the SpaceX thesis, and by the time I was buying into Tesla, the SpaceX thesis was beginning to actually evolve in reality. And so, and I'd read the thesis on the car company, and that was beginning to evolve in reality. So I just felt very comfortable taking a relatively small amount of money and making that investment.
Well, so you had, I would say that at the price you paid, it was a little less painful because when I bought in May of 19, and May of 19 was much more expensive than what you
Yeah,
paid.
yeah,
But I had the luxury of seeing a lot of execution. And when I
yeah,
bought my shares, it was on the strength of Fremont and the half-built Giga Shanghai.
yeah,
Cybertruck had not been debuted; it had been teased but not shown. And my thesis was this company will outperform the S&P 500 over the 10-year horizon.
yeah.
And I did okay. But now the big question, and before you answer this, I'm going to mention that Larry is coming to join us in Michigan for the big summer meetup. Join us, won't you? It's in Muskegon. It says 26 days. It's actually less than that because, time is linear, and this was recorded before it aired. June 20th and 21st, he will be speaking on the 20th with a whole lot of great folks. Sandy Monroe, Jordan Giesecke, Dr. Know-It-All, Bearded Tesla Guy. We got a whole heck of a lineup here. And join us, won't you? And we've got two speakers coming all the way from Germany. So that'll be fantastic. My question is, and this is a question people have said, well, boy, when the stock hit all-time highs, I bet you wish you sold it then because now it's down whatever it might be, 10%, 50%, 80%. But I never agree with them. I never say, yeah, I wish I sold. Why haven't you sold? Why didn't you double your money and get out a winner, a big winner? Oh my gosh, you doubled your money. You bought Microsoft for 12 and sold it for 24 in the 80s. Good job. You look like a hero for 5 seconds and then
Yeah.
so why haven't you sold? Why are you still in it?
Yeah, I could give you a long answer philosophically, but I'll give you the short answer. Amazon had a very sawtooth, profile. It would drop by 60, 70% under some circumstances. Actually, in 2000, I think it dropped by 98%.
That was the dot-com burst.
Yeah, dot-com bubble. And it took
People
a long
couldn't tell that Amazon was a different company than those vaporware companies.
Yeah, and it took a long time to recover. But here's the bottom line. You don't buy shares to make a couple of bucks. You just don't. If you do, you're going to lose money because some will win, some will lose, but by and large, you buy shares because you have high confidence in the management, the thesis, the investment thesis based upon the company's objectives. And as long as the company continues to demonstrate that intellectual and execution commitment, you put the stuff away unless you actually need the money. Because if you need the money, there's nothing that can be done about it. But if not, then you're always going to do better in the future than you're doing now. So, I mean, it's foundational to actually invest in investing. Now, if you're speculating, that's a whole different game. People do speculate. Some of them win, very few of them actually win. But if you're investing, then time is your friend as long as you've made sound investments and you have a sound thesis and the investments continue along the line of your thesis. I don't know how else to put it.
When it comes to day trading, the fundamentals don't matter. You don't even have to know what the company is. Maybe you've got some mechanics that you can see at play that you think. But my caution to people who think they can outsmart the market is you're up against two types of people: the people who do it all day, every day for a living, and their algorithms. And if you want to say that you're smarter than those people, you're welcome to believe that. I've met a lot of them. You are not smarter than them. These are very, very smart people, but you will never be faster than their computers. It's not possible. And they survive on a fraction of a penny gain times, millions.
That's very different from being an investor. Look,
Absolutely, completely.
who's the greatest investor of all time?
Warren Buffett?
Arguably Warren Buffett.
Yeah.
Yeah. Arguably Warren Buffett. And Warren just shows it again and again and again. Time is his friend. And he very seldom bails out of a company because their stock is high. Over time, he will perhaps, adjust the load that he has. But I mean, he has been invested in companies for 30, 50 years. I mean, so that's the way to invest. Now, if a company somehow drifts outside its thesis, if management changes for the worse and so on, that may be a reason to sell. But there's no reason to sell, if you're invested in somebody in whom you believe and who has established a thesis in which you believe. So that's the case of Tesla.
For me, it's I will begin considering to sell either when I retire, which is it's all of my money's in my IRA. I can't really touch it for quite some time yet. Or when the company begins to shift to being a traditional non-growth blue chip company, if they start paying dividends, if they don't know what to do with the money. Now, I think they're going to reach a point where they don't know what to do with the money, but not because they've run out of ideas, but because they've run out of worlds to conquer and the money's piling up too quickly. If you've got
planets to conquer.
Well, at that point, because if you are excited about the idea of building an economy car and selling it for a 20% markup, oh my gosh, we got $5,000. What if that car can produce $5,000 a month? I mean, it's mental to think about, but it's not impossible.
Right.
And while there will be competition, while other companies will be unveiling similar or identical or maybe even better products, it doesn't matter. They're going to be in this game and they're going to be among the first. And I agree with Kathy Wood's assessment, at least for the US. It is a winner take most sort of market, and you don't have to be first. Tesla has not been first to a lot of things. The Chevy Bolt came out before the Model 3. It's going to kill it. No, it's not an exciting car. It's not any good. And I don't remember if it came out before or just at about the same time. But Chevy is a much bigger company. They know what they're doing. They're going to crush them.
I think the Volt came out first and then the Bolt came out after the Model 3. But, it really didn't matter. I mean, the car was not of the same ilk. But here's what's interesting about Tesla. They had a thesis and they had a plan and they were executing to the plan. And then something changed. And what changed?
The promise of autonomy, right?
Elon saw a different future. Now, he had a great struggle repositioning the company because he had to struggle against his entire management group. so we were not party to that. We didn't have visibility to that, except we now have a little bit of a glimpse of it through the biography. We got a sense of it, and that was the first time that I saw that Elon is repositioning the company from a car company and an energy company into an AI company, embodied AI company, embodied AI in rideshare and in autonomous driving and embodied in robots. And that is a whole different world from where the company has set out. And this is classic. We saw the same thing in Amazon when Bezos changed the direction of the company and became the everything store. But it's leaders like that that you really want to be invested in. Now, if Elon had made that change and I wasn't confident in that change, that was the time to reconsider the investment. That's a classic
Sure.
time to reconsider the investment. But I was along for the ride. Why? Because the reconsideration seemed to me to make a lot of sense. Very risky, but all of his ventures are very risky by definition.
Yes. Yeah. So the last thing I wanted to ask is, and only because I've seen people ask this online, because AI is such a big part of Tesla's future, and XAI is a separate company now, part of X. Is there a likelihood in the future that they would merge?
I've
I know, it's a
given a
tough
lot
one.
of thought. I've given a lot of thought to that. I think that it depends on how well this move to Texas evolves for Elon. I'm absolutely certain he doesn't want XAI or X to be publicly owned. I'm absolutely certain of that at this time.
Mm-hmm.
However, I think that if he sees that being in a public company in Texas gives him a level of certainty that he has lost in terms of running a public company, there may be a possibility. Now, remember, it's not just this crazy judge or this crazy pair of judges that are in Delaware. And I call them crazy judges because, it's quite clear they are driving the Delaware in a certain direction. The legislature's trying to change that. But nevertheless, it's also the cost of this constant legal struggle, being sued so many different times as a public company. So I think there are reasons why he would not want to somehow get involved. But on the other hand, it makes a whole lot of sense, just a whole lot of sense. So I think time will tell.
So you're saying it's not a bad thing, and it's not a bad thing that that it hasn't happened, but you understand the obstacles and they make sense. And I will say, normally when people say I don't like a judge, what they're saying is I don't like the decision. In this case, that's definitely what people are saying. But when
Mhm.
she started her judgment with no one should earn this amount of money, she's done. That's it. You're out.
No,
Because
when she started by saying, you know, questioning the position of the wealthiest man in the world, that phrase, you're in trouble. But let me tell you something, Brian, that I don't know if you listen to the BG2 pod. It's an outstanding pod. I highly recommend it. However, Bill Gurley read an article in the last pod written by a scholar, somebody from a very senior guy from Stanford. And he analyzed judgments like across the federal government versus across Delaware. And he discovered that in Delaware, the amount of award to the attorneys for cases where the lawyers won the case against the company are something like 75 times the award to the attorneys, 75 times the award given in federal cases to lawyers, winning lawyers.
I wonder if that's because the cases are bigger based on the
No,
fact that it is Delaware. No,
no,
wow.
no.
Oh, because it's the award you're talking
Yeah,
about,
yeah, yeah, yeah,
not
yeah.
the Right.
And federal
The
cases are generally
oh,
larger than
geez.
Delaware. So what he's trying to show, and this has happened, by the way, since these activist judges came into the judgeship, Lassiter and what's her name,
McCormick?
McCormick and Lassiter. So and by the way, McCormick can decide who gets the cases, and she has chosen to take those cases with the maximum amount of. Anyway, bottom line is that if you go to Delaware, the chances of losing big and having to pay big money to lawyers is very much higher than anywhere else in the country. This is a study that's just been done at Stanford, and Bill Gurley read it, and he sort of thought it was a Elon thing, and now his eyes are open, and he said, whatever you do, and we're talking about a guy who ran one of the biggest, if not, yeah, one of the biggest venture companies in the country. He said, I'm telling all of my companies, do not register in Delaware or move out of Delaware. This is actually a very serious thing because people haven't looked at this fact before. So I'm going to publicize it, and it's worthwhile making an issue of this and making this very public.
Guys, I want to hope you will join me in thanking Larry Goldberg for joining us today. We are having so much fun. This was a great discussion. I appreciate your time. I look forward to seeing you in Michigan at the big summer meetup. Guys, in the comments, are you coming? But also, what did we miss? What did we misunderstand? Leave it. You must. Do like and subscribe. I know it's terrible that we have to say it, but we do, because if I don't say it, no one subscribes. And subscribers is how YouTube knows to show this video to people, because otherwise, I don't know, man, what are we going to do? So, everybody else, stay tuned, stay juicy, and I cannot wait to hear from you, clever robots, on the flippity flop.